As you probably know, there's a big supply and demand gap to fill, and because recent policy has been favoring more missing middle type of projects, it's getting pretty obvious that Toronto real estate is shifting towards better opportunities in the freehold market. So now once you combine this with better rent yields as well, more investors are looking to reposition their condo investment into a house than ever before. But with the softening real estate market these days, you might feel that selling a condo isn't the best move at the current moment. Now, if repositioning is in your plans, here's what you need to know. It is actually a smarter choice to reposition today, and we'll prove this in this video with actual numbers. Let's dive right in. If you're just selling, then clearly the higher selling price, the better. But repositioning is actually very different from just selling. What happens is that you do sell at a lower price, but you're also buying at a lower price. And because the house that you're buying is typically a higher value asset, you essentially do have a net purchase, which means that you end up with net benefits in a down market. Now, another thing to consider are fees and taxes, which are calculated as a percentage of prices at the time of reposition. And doing this in a down market just means that you end up with less fees. Now, the last thing to keep in mind is the benefit of deferring capital gains taxes if you sell today. If you reposition when prices are higher, you end up paying more capital gains taxes upfront and less later. So even if you make the same amount in both situations, capital gains tax deferrals to a later date is actually better from a time value of money standpoint, and that's another thing that's going for selling today. Now, if all of this does sound a bit too abstract for you, let's dive right into an example with actual numbers. Let's say you bought a condo in Toronto in the summer of 2020 for $650,000. In March of 2022, prices peaked at 20% higher than the purchase price, but now we're back down to around 10% above your purchase price. The house market is a similar story with bigger swings. So right now, you can buy a house in Toronto for around $950,000, which is a deep discount at 20% less than where we saw prices at the peak of 2022 at $1.15 million. Now, let's look at two scenarios. The first one is to reposition today, and the second scenario is to reposition when prices recover back to previous peak prices. And in both situations, we will sell the house at the same time later down the road when the house prices go up 20% above the previous peak. So as you can see, repositioning today actually gives you higher net gains because of the reasons I talked about earlier. The first reason is because you end up being in a net buy position. So buying when prices are lower end up giving you better gains overall. And number two, your land transfer taxes and selling fees are less because you are repositioning at lower prices. And the third reason is that even though your capital gains taxes are higher because you are making better gains in the first scenario, most of these capital gains taxes are deferred to a later date. And these three end up making repositioning today a pretty good idea. Now, another scenario our clients have been exploring is to stagger the buy and sell. How do the numbers actually look like if you buy first today at lower prices and then you take on a private loan to do that because you haven't sold your condo yet? And then later down the road, once prices recover on the condo front, you would sell that condo at a later date. It is pretty creative and it could end up giving you better returns, but honestly, it is a lot more work, a lot more stress, a lot more risk, and you might also affect your future growth potential. So the big thing is that the risk is actually a huge unknown. So let's say you're looking to sell when prices rebound back to the previous peak, which means you would have to make around $45,000 more. Now, this only makes sense if your carrying costs are lower than that, and there is no way to find out what your carrying costs are right now, which is your big risk. Now, if it's a year for prices to rebound, it might still make sense, but if it's anything more than that, it definitely doesn't make any sense anymore. Either way, we think that the risks do outweigh the rewards in this case, and so we don't recommend this. The other thing to keep in mind is that doing this does rack up a lot more debt. So before you even consider this as an option, do check with your mortgage agent first to see if you actually qualify. And finally, even if you do, this will definitely eat into your further borrowing room because you are borrowing a lot more money, and this could potentially cripple you. If you are looking for flexibility to grow your portfolio after this move, repositioning today ends up being just a much cleaner and better risk-adjusted return solution. Now, these are just the basics, and there will be small differences in each person's situation that this video might not cover. So if you do want to talk out your individual situation with us, let's chat. We'd be happy to look into your unique scenario and explain your options to you. Just reach out by heading to this link right here to book a discovery call with us. If you enjoyed this video, show us your support by giving this video a thumbs up and hitting that subscribe button to keep up to date with our content. Our channel is all about real estate investing in Toronto, covering everything from market trends, housing policies, to interest rates and best investing strategies. We're here to make your real estate investing journey easier for you, and so our team offers services like planning, analysis, buying and selling, renovating, finding tenants, and even property management. If you want to learn more, just check us out on our website or find us on social media. Thanks so much for watching, and I'll catch you in the next video. Bye.